Hello and welcome. You're watching Ask Profit on NDTV Profit, and this show is all about stock related questions. So you can write to us on the WhatsApp number that will be on your screen in just a minute, and also you can write to us on any of our social media channels or through the YouTube live chat. I'll be tracking that as well, and we'll be taking up any of your stock related questions that you have. But before we start that, let's take a quick check on where the markets are currently at. Now, if you look at the benchmark, the Nifty 50, it's trading with cuts of about 0.6%, a bit of a confused day for markets and a bit of a range-bound day as well. If you look at the range that it's trading, it's between 21,530 and 21,650. So about 130, 140 points thereabouts. That's the range that Nifty 50 is trading in. Let's look at the constituents of the Nifty 50 as well, and if you look at the losers, and okay, there we have most of them are losers. We have the big ones, which is HDFC Bank, Infi, TCS and L&T that are trading with cuts, and the biggest loser on the Nifty 50 is Tech Mahindra, that's down 3%, followed by Infi. Now, this weakness in the IT sector may be on the back of US CPI numbers that came in yesterday, and the inflation is hotter than expected. So that's probably why we're seeing a lot of weakness in the IT sector today, and it's down 2% in trade. But and even if you look at the breadth of the market, it's kind of within the Nifty 50, we have 20 advances and 30 declines. So see, we started off on a decline, and now advances have kind of taken over. That this is the full breadth of the market, but on Nifty 50, the declines continue to have a higher share on the benchmark. Let's also take a look at the broader markets. Let's pull up Nifty Mid-Cap Index, and if you look at the Nifty Mid-Cap, we have about 0.2% lower in trade, 30 points. Let's also pull up the constituents in the Nifty Mid-Cap Index and see what are the which ones are pulling the index down as we speak. Nifty Mid-Cap 150. There we have Vodafone Idea that's gaining sale, and Z Enterprises. Z also came out with its results yesterday, and also in their con call spoke about the legal action they have taken on the merger. Now, let's also look at the small cap index and see where that is going as we speak. It's Nifty Small Cap. These are the constituents. We have Buildcon, which is up about 10% in trade. Let's see the index where the Nifty Small Cap Index. Okay, I'll just quickly pull that up. The Nifty Small Cap is, if you look at, it's higher. It's 0.6% higher Nifty. Yeah, there we are at. And let's also look at the sectors as well. Which sectors are doing? Most of them are kind of in the red today. As I said, Nifty IT is the big loser, and Nifty Pharma is also down about 1.7% in trade. Among gainers, we have auto, that's in the green. Energy sector, media is the biggest gainer among sectors, that's up 1.5%. So that's where we're currently at in terms of markets. But the focus for today is Eicher Motors. Now, this is on the back of numbers. It came out with its results yesterday, and the results were largely a beat on most parts. If you look at the revenue, that grew about 12% in trade, 12% year on year to 4,179 crore, and EBITDA also grew about 27%. Margins slightly expanded on a year-on-year basis, and net profit also grew 34%. However, brokerages seem to be wary on Eicher Motors. Now, this is because of intense competition, and also there's some concern around demand from the export markets that Eicher Motors, in terms of Eicher Motors. So that's where which is probably why we saw a little bit of a downtick in the stock for Eicher Motors, and it turned positive for a little bit, and now it's down again 0.5%. So that's where we stand on Eicher Motors, but we'll take an expert view on this. We have Ashish Kapur of Invest Shoppe joining in, and Vaishali Parekh of Prabhudas Lilladher joining in as well on the show. Welcome to both of you. So Ashish, I'll come to you on Eicher Motors. Pretty decent results, but some concerns around the future demand. But how would you see the stock in the longer term performing? Do you see these headwinds kind of continuing? And what would you suggest our investors who have already bought in the stock to do with it?
Well, I think certainly the investors can hold on. I think the story is very much on. I think their brands have a very great aspirational value. So I think the volume and the profitability has been doing fairly well in the recent past, and I think that should continue going forward. 4,200 is a target which we have, so I think on declines it can also be bought. I think not only is the demand for auto and two-wheelers going to be firm going ahead. I think like I said earlier, I think their brands also appeal a lot to the aspirational class, so that will also really help it maintain its margins. And I think the little bit of consolidation which it went through in the last few years also seems to be getting over, as their earnings and growth momentum seems to be picking up. So I think it's a good stock. Look for adding on declines, and if you already bought it, then continue to hold on. 4,200 should be a target, which I think within 1 year we should get.
All right, fair point. So buy and accumulate from Ashish Kapur on Eicher Motors. Let's quickly jump into the questions. The first one is coming on Infibeam. This one's for you, Vaishali. The stock, they've bought the stock, and let me just pull out the name. We have Sumit from Qatar writing in, and they've bought Infibeam at 37.75 per share. And their period is about 6 to 8 months, the holding period. What would you suggest, Sumit, to do with this?
So, yes, Infibeam, actually, it's getting into a trend. We've seen a long consolidation happening right from 24, and then it did rise to 40 levels. So currently, it is at a moving average support. So I would say continue holding with 30 as stop loss. And we are seeing from today's candle also, there is a sign of bounce back and new round of momentum. So let it cross 40 levels, since his holding period is for a bit longer. I mean, if let's keep a range of 30 to 40. Once it crosses 40, you can expect higher targets as well.
All right, fair point. Next up, we're talking about Paytm. Now, this one's coming from Muralidharan from Chennai. Now, this is a popular question among our viewers. People who bought the stock at IPO, they never got to see those levels. Ashish, now somebody who's holding on to Paytm and bought it at an IPO price, there is still uncertainty around how things will play out. What would you suggest a person holding it to do?
Well, all I can say is I can just feel bad for the investors who bought it at IPO price, because currently the situation is pretty bad and I don't see anything really happening in a hurry and turning down in a hurry. I mean, one can just hope that somehow the issues get resolved and maybe some other promoter or some other group buys a stake and in this company and takes it forward. Otherwise, I think my clear this thing is that, whenever these kind of queries start, I mean, there is no smoke without, there's no fire without smoke. There's no smoke without a fire. So there is plenty of, things which will get unearthed, because that's why RBI did put the restrictions on Paytm. Best to avoid, but if you've already bought in, and especially at the IPO price, I think it will still be better to use any kind of an uptrend to exit and put your money somewhere else where the chances of recovery would be faster and maybe more certain. Paytm, according to me, will remain uncertain for a long period of time, and I think the fear is also that some other things may get unearthed during the investigations, which can pull the share down even further. So either way, I think, yes, it's a very difficult decision to take, but I think use any uptrend to exit and put your money somewhere else would be the best advice I can give.
All right. Fair. I mean, we're yet to see how this plays out. The last date that the RBI has given is 29th February. But let's talk about Yes Bank. This one's from Jiva from Chennai. And Ashish, I'll come to you on Yes Bank. They've bought the stock at 32 levels and the stock is currently trading below that. They have another question about the farmers' protest that is happening on the borders of Delhi. If that will have an impact on stock markets, I don't think we've seen anything that sort of impact on the stock markets. But do you think if it kind of intensifies, there can be an impact there?
No, I don't think so. I think it's not the first time we are having a farmer stir here. And I think was it November of 2020, we had a much more difficult situation here. I don't think the markets are taking much cue from these kind of events. They are more political in nature, so I think life goes on without all these disturbances. So that is not an impact. Yes Bank, frankly, I think the run-up is kind of an opportunity for investors who have bought at lower levels to exit. So if you've been fortunate enough to buy into rights issue at 12 rupees, or to buy at when it was, on the time between 12 and 20 rupees for, I think, almost 2 years. If you have bought at those levels, then it's a great opportunity to exit. I think the company will take a long time. I think the bank, while price may look low, the valuation is not cheap because what I think most of the investors are ignoring is that when the bailout happened with the help of SBI, the capital also of the bank really went up. So, on the increased capital, it is still it's still looking expensive compared to the operations. Although operations have turned around, but the valuation is still high for what the bank can give, given its size of operation and the status of turnaround. So I think if you bought at 32, you're not making too much of loss. Better to exit and put your money somewhere else. As I think the stock will take a long time to recover.
Right. Vaishali, do you also have the same view on Yes Bank? If somebody has bought at higher levels than the current price, would you suggest exiting or holding on to it for a little bit?
Well, I would say chartically there is nothing wrong in the chart. I mean, it's just a regular retracement because we've seen the stock moving right from 22 levels to a high of around 30 to 33 levels. So this is regular retracement, I would say. But having said that, I would say 24 now on near-term basis acts as a crucial support. So if you see a close below that, it damages the trend. But till then, it is a hold. In fact, if I'm seeing a larger picture, I mean, if I'm seeing a weekly chart or a daily chart, I think this stock is poised for a target of, well, once we cross the hurdle of 33, we would be looking at a target of 36 and 40 levels as well. So 24 should be the trigger point to exit and wait for the opportunity. Above 33, we may see higher prices.
All right.
So I would say hold on for some time.
Okay, so we have both the views, the fundamental and technical on Yes Bank, and we've gotten a lot of queries around this stock, which is why both the views seem to be pertinent at this point. Let's talk about GR Infra. This one's from Karthik from Visakhapatnam. They bought the stock in the IPO. We saw the results yesterday. Revenue and profit both decline on this stock. Ashish, from a longer term perspective, how does GR Infra look?
I haven't tracked this counter, so I wouldn't like to comment.
Okay, let's quickly take a shorter term view on this as well, because Karthik is asking for both of them. Vaishali, GR Infra, from the charts, what kind of levels should one watch out for?
So, well, just last 2 days, we've seen a low happening at 1150. So that should act as a stop loss. If these levels break, then this stock calls for further corrective move. But I think one can expect a bounce. It's a wait and watch, and the level of 1150 is the make or break level.
Okay.
So trade accordingly.
1150, got it. It's time to slip into a short break now, but after the break, we'll take a whole many questions that are pouring in. So stay tuned. Welcome back. You're watching Ask Profit. Let's quickly dive into the questions. The first one's coming from Ramesh from Hyderabad. They're talking about Sirma SGS. They've bought 50 shares and they're a long-term investor. Should they add more at the current price is the question. Ashish, from a longer-term perspective, Sirma, how does it look fundamentally? I think we've already seen the third quarter earnings as well for Sirma.
Well, again, I mean, I haven't tracked this, Vaishali, so I don't know. I won't like to comment on it.
Okay, all right. Based on the charts, good time to accumulate Sirma, Vaishali?
See, the stock is really oversold and well, the trend is quite okay. But if 480 levels break, then it is calling signs of weakness. So I would say keeping in mind 480, it's a fair value to buy because if the stock holds some fundamental strength and 540 levels are crossed, then we are back on track to see higher targets. So yes, at this juncture, 480, keeping that in mind as a crucial support, it can be considered to buy.
All right, fair point. Next up, we're talking about Campus Activewear. This one's from Mohit from Ludhiana, and they bought at the at level of 289. Now, can we pull up the chart and see where the stock is currently trading at? Campus Activewear. It's around 248, so it's slightly lower than the buying price. Now, is this a part of your coverage, Ashish? Would you be able to give a long-term view on Campus?
I think long-term view on this would be fairly positive. I think the investor should hold on. I think that's okay. A bit of variation in price can happen. I think the story is quite interesting, and I think one should hold on to it. Hopefully, in a longer period, 2 years plus time frame, we should make a good amount of money on this.
All right, got it. Next up, we're talking about RVNL. This one's from... I'm not sure of the name. Rakesh, and they've bought the stock at 265 levels. Now, Ashish, we've seen quite a run up in PSU stocks. Then we saw a little bit of correction there. So, talk a little bit about PSU stocks because we've seen this kind of trend where, and we have multiple questions on these PSU stocks that saw a run up and then a decline. And now, the question is it a good time to accumulate these? So, specifically about RVNL and as a pack as well.
Well, I think as a pack, while there is a reason for also for re-rating these PSU stocks, and the reason is that by and large their performance and the way they are looking at shareholders has changed over the years. So market has finally taken note of that, and I think if you follow the investor conferences of all these PSU stocks, the talk is much better now. They're talking about investor wealth, they're talking about dividend policies, they're talking about various things which are more market linked than what they used to do earlier. So definitely the working and the shareholder focus has certainly changed. So there was a reason for re-rating, which has happened in a very significant way. Now this re-rating is not going to end very soon. That's what my take is. So therefore, this rally is not going to end in an abrupt way, and I think it's going to go on for a reasonably long period of time. That's the good news. The other thing is that the run-up was extremely aggressive and fast and furious, and so at some stage it needed a cooling off. What we are right now seeing is a cooling off. So very near term, there would be issues, and I think the run-up is more or less done. And they could correct more. They could cool off for a longer period of time also, maybe a few weeks to maybe a couple of months also. But if you're a long-term investor, 2-3 years kind of a horizon, then look at accumulating these stocks in this cool-off period. I think that, like I said earlier, I think that my take is that the re-rating is going to continue for some more time. And I think with the operating performance also improving, this will continue for a few years more. Till the whole thing gets re-rated and gets valued closer to what the private peers get valued at. And still we have a long distance to cover in that. The good thing is performance is improving, and most of these companies have good dividend pay masters. So the earning support and the safety is there. So definitely in portfolios, they should have a good weightage going forward. And so look at declines to add. RVNL, yes, very good story, because railways in particular, the turnaround is even more significant. The railways were always, the railway stocks will always be very short-term trading stocks. One would buy 6-7 months before the budget and then sell it closer to the budget. That whole thing has changed. That's why many of the investors were not able to catch these stocks at lower levels. The delivery is certainly improving. It's noticeable. The order, execution has gone a sea change, and the number of new trains and the kind of modernization which railways are doing is very significant and cannot be ignored at all. So therefore, even RBNL at decline should be a good stock to buy.
Right, got it. Next up, we have a question from Srinivasan, and they're talking about PFC and REC. Now, Vaishali, if you could give us the buy levels that we should look out for in these two stocks, PFC and REC.
So, well, PFC currently, the trend is intact. So, I would say not an aggressive buy, but it could be a buy with a stop loss of 400. Because if we see the stock breaking the levels of 400, the long-term trend gets damaged. So, we could see some corrective moves. So, I wouldn't say aggressively, but yes, if one has to buy, 400 acts as a crucial support. Sorry. About REC. So REC also has its upward trend intact, and today's candle also we are seeing that yes, the support has been respected. I would say 440 acts as a support level. So keeping 440 as the support, I think one should go for this stock, and below that I maintain the view gets negative.
All right, understood. Unfortunately, we're completely out of time on this edition of Ask Profit. If you were not able to take your questions today, we'll definitely take them up tomorrow. So stay tuned. Lots more coming up on NDTV Profit, and we'll be back tomorrow at 11:30 a.m. Stay tuned.